Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. Welcome to Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Nigel. And how many times, Nigel, have we started the show saying that there will be progress soon to end the Iran war? But at the end of the day, the US-Iran war narrative continues. It offers a lot of headline volatility. But so far, there has been a little progress towards resolution. So just to quickly take stock of what happened on Wall Street overnight, the Dow recovered about 300 points from the day's low. It ended up in the green, 160 points higher. The S&P 500 also managed to recover, but still ending just below the flat line. Nasdaq was the key underperformer on account of underperformance from memory stocks. The reason is Donald Trump wrote on Truth Social that he's holding off a planned attack on Iran on Tuesday. And this came after some requests coming in from three regional powers in West Asia. Let's just quickly pull up the Asian markets to see if there is any kind of a reaction coming through on Asia this morning. You've got the Taiwanese markets down nearly 1%. Hang Seng is holding up in the green with a gain of about 0.3%. We got the economic data coming out of Japan. The Q1 GDP was better than what the street was anticipating. It came in at 2.1% annualized versus an expectation of 1.7%. And the Korean markets, there's so much news flow about Korea that how the retail traders are now getting very aggressive in the leverage funding, the margin funding is going up in Kospi. So Kospi will also come up. But Prashant, lots of headlines once again coming
lots
in
of traffic also.
But you know, at the end of the day, crude is still at 109, right? Exactly where we left off yesterday.
Yeah, absolutely. Morning, guys.
Morning.
Well, it's a hurried morning, absolutely. And I think let's just take it from the top because oil's the big worry, what has been the big worry for a while. And we are at about $110 odd a barrel this morning. I mean, almost $110 odd. So small fuel price hikes coming through again. So diesel is up about 91 paise, petrol is up about 87 odd paise or so. And this is after, of course, a 3% hike, the 3 rupee hike that we saw earlier. You know, these are demand management measures. I mean, prices have to go up. Yesterday, Sanjeev Prasad was with us saying that, you know, 20 rupees is the difference. 20 rupees is the hike which is needed to plug the losses OMCs are making every day. And they're expecting a cumulative hike of 10 rupees, including the 3 we've seen, but perhaps another 7. I mean, you know, roughly that is their expectation. So for now, the government, of course, is taking it with, is being very, very gentle about it and taking it up slowly in that sense. And we'll talk more a little later on this strategy. Staggered, as we said, when the 3 rupee hike came through as well, that perhaps there is more coming, but the quantum has gone down. Now, U.S. equities basically swung between gains and losses. Nasdaq finally ending about 0.5% lower. S&P was kind of flattish. Iran, of course, offered an updated peace proposal, and Trump on Truth Social essentially, you know, said that they're going to hold off a large-scale military attack on Iran, which was scheduled for Tuesday, which is scheduled for today, and essentially saying that his Persian Gulf allies, America's Persian Gulf allies, have all come together and have basically persuaded Trump that there is a real diplomatic pathway off-ramp to this, and hopefully, you know, a deal will be made. I mean, the Post goes on to say, well, you know, the military is ready to attack at a moment's notice if this does not materialize. I mean, more of the same. But for now, it's kind of stalemate, status quo in that sense. Just to talk about oil and what's happening, U.S. issued a third extension of the Russian oil waiver, which is, of course, you know, India yesterday, for example, at a press conference, government press conference said, well, waiver, no waiver, India continues to buy oil from Russia. And I think we said it absolutely emphatically. The news on the oil waiver came later in the evening. So, you know, it is worth what it is. But I think the government made it very clear that India will buy and is buying Russian oil. And this is before the sort of waiver for countries to be able to buy Russian oil came through. Interestingly, Iran has launched a Persian, basically an authority for the Strait of Hormuz, simply put. And it's called the Persian Gulf Strait Authority, PGSA. This is going to manage the Strait of Hormuz. And, you know, there's Bitcoin involved, there's insurance on offer, etc., etc. We'll see. They've got their own, Twitter handle, X handle as well. Equities yesterday here in India rebounded, a pretty sharp rebound, 300 points off the lows. But here's the thing, rupee did not. Absolutely kind of, weak close, and we closed almost at the record low. 96.33 was the low, I think we left off there. So with that kind of setup, the levels don't change very much. It's a flattish close on the index, so the levels are the same, 23,800 on the upside. It's basically Friday's high, 23,839. And of course, the gap zone on the way down is about 23,153. So not very much new in terms of cues to sort of be able to push us up or down in a meaningful way, I guess, as we begin this session. GIFT Nifty gives you a sense of how we like to start. I think it's absolutely flat. Nothing really on it. About 4.5 odd points lower. And then we'll pick it up from there. Nigel is popped across to the wall with the futures and options positioning and how things are looking. Nigel, take it away.
Well, we'll take a flatter start to kickstart trade today. But yesterday, it clearly indicated a big intraday recovery is what we saw. And it seemed like the bulls, they sensed that Trump may back off a little bit. And that's why probably we saw a big intraday recovery on the Nifty itself. Or probably they were sensing that something will be announced from the center. At least overnight, you've seen Trump back off just in the near term, which is good news for equity markets, us included. In terms of cash flows, the DIs and the FIs, well, they both thought alike yesterday. Both of them were buyers in trade. But you need to keep in mind that the flows were skewed because of the JSW Steel large trade that we saw. GQG Partners, they bought big, into the company at around 1,260 rupees, while SBI Mutual Fund, on the domestic front, they were buyers as well, bought closer on the Crow shares at around 1,260 rupees. So the flows yesterday were positive on the institutional side, but they were skewed because of the large trade that we saw in JSW Steel. But there was clearly short covering that played out in trade yesterday because the Nifty from the low saw a good recovery and the open interest was low as well in yesterday's trade. And it perfectly tallies with actually what the FIs did because there was open interest that was down. If you look at the FI activity on index futures, you'll see that, they covered some shorts. Yesterday, 7,500 contracts is what they covered on the short side. And now the short positioning continues at around 88%. But let's pull up a trend chart. Because you see the way the FI short positions have come down. Just to pull that up for you on the screen, you'll have the FI short positions that have come down from around 2.4 lakh contracts. It's come down to around 2.10 lakh contracts. So closer to 30,000 contracts have got covered on the short side. On the client side, well, they have been booking some profits, in terms of that bounce that we saw from around 23,250 or thereabouts. And they're still net long. But this sort of a combination actually is not such bad news from a market perspective. The FI is being aggressively net short while the clients being net long. You'll want to see more of the same in terms of those covering of short positions, which helps the market to move up. But in yesterday's trade, the FIs didn't just cover the shorts. The calls that they wrote earlier, that as well got covered out because these call writers, they got stuck on the wrong side with the way the markets recovered from the lows of the day. And there were some signs of put writing as well in trade yesterday. 1.7 lakh contracts on, in terms of put writing is what we saw. And pull up a couple of strikes. 23,600 call, that had a good amount of open interest build up. The 23,400 put as well, good amount of open interest build up. So just punching in this premium that we saw at around the 23,600 call, we'll get the near-term level. So in terms of resistance, the 61.8% retracement, that's the first level that you'll be looking at for today's trading session, which comes in at around 23,680 approximately. Then all eyes will be on the 50 DMA, and then you look at the 20 DMA. So in terms of resistance levels, these are the three levels that you'll be keeping an eye out on. Support levels, the recent low as well as yesterday's low, well, they become the important support mark at around 23,250 to around 23,320 approximately. Well, the headline index, hopefully it sees some kind of, buying from lower levels. But yesterday, though we saw some kind of improvement in the number of stocks advancing, you'll want this graph actually to be better because that's what we saw for the last 45 days or so. The number of stocks advancing need to be better than the number of stocks declining. So breadth of the market should improve. And also the India VIX, you don't want it to get past the 20-odd mark. Last few trading sessions, it's gone numerous times till then, but it's got rejected. So that's good news. You want it to trend towards that 15-16 mark. And finally, the Indian rupee, hopefully some signs of stability. Yes, the equity markets rebounded, but you'll want some stability on the Indian rupee as well. So net, we have a work cut out. It's the weekly expiry today. Volatility in the last 60 minutes on the Nifty. But the bulls will hope that after yesterday's rally, you see some kind of follow through as well.
All right. Thank you very much for that. Let's get back to the updates then from West Asia. US President Donald Trump, in a post on Truth Social, has said that he has delayed an attack on Iran that was scheduled for Tuesday. That is today. This is on the request of leaders from Saudi Arabia, Qatar and UAE. The US president added that serious negotiations were underway and that if a deal wasn't made soon, Iran could be attacked in a moment's notice. When asked by reporters on what he meant by the post, this is what the president had to say.
We were getting ready to do a very major attack tomorrow. I've put it off for a little while, hopefully maybe forever, but possibly for a little while, because we've had very big discussions with Iran, and we'll see what they amount to. I was asked by Saudi Arabia, Qatar, UAE, and some others if we could put it off for 2 or 3 days, a short period of time, because they think that they are getting very close to making a deal. And if we can do that where there's no nuclear weapon going into the hands of Iran, I think, and if they're satisfied, we will be probably satisfied also. We've had periods of time where we thought pretty much getting close to making a deal, and it didn't work out, but this is a little bit different. Now, we're ready going tomorrow, very big, and not something I wanted to do, but we have no choice because we cannot let Iran have a nuclear weapon. It seems to be a very good chance that they can work something out. If we can do that without bombing the hell out of them, I'd be very happy.
All right, let's get William Lee, Chief Economist and Managing Director at Global Economic Advisors, on the show. William, how many times have we started the interview on hope that there will be progress to end the war? But unfortunately, a lot of headline volatility continues, lots of news flow coming in from Donald Trump. But so far, there has been little progress towards resolution. What's your overall assessment of the situation now that the war has gone on for, perhaps 12, 13 weeks now?
I think it shows that the China visit is something that was, I think, an important event because President Trump was saying, we'd like to end this without bombing the hell out of them. Right? That was the operative statement. He was prepared to say, let's bring this to an end, one way or the other, and he preferred not to use military force, but he was prepared to. I think that's the message he delivered to President Xi. And let's face it, President Xi could open up the strait with one phone call. Iran is the China client state. Iran is the major seller of oil to China, and China is the only customer for Iran. So in many ways, President Xi could have just said to President Trump, look, if you want me to end this, I'll end it for you by making the phone call. But I think it's in China's interest also to see the United States squirm, to show the world that the United States is not capable of opening the straits, regardless of its military might. And I think the discussion was a nice back and forth between President Trump and President Xi, where President Trump said, look, I am going to start up military action again. And once I bomb out their facilities, you're not going to get any oil. So I think that was the back and forth that went on between them. And I suspect after Donald Trump left, and now with Putin there, China has decided to place a phone call, perhaps indirectly through the Middle East nations that you mentioned, to say to Iran, let's start negotiating seriously. So I think that's the development that might make markets more optimistic if Iran becomes serious. But with Putin on the scene, I think there's a second play going on, which is to say Putin is telling China, we will supply you with all the energy you need. So you don't really have to rely on the Middle East. You don't have to rely on Iran. And I think the pressure now is on the rest of Asia, India, South Korea, Japan. What will you guys do if there is no peace and if the strait is not open? And I think the pressure has to come from you guys, the rest of the Pacific Rim, to China to say, if we are going to be your trading partners in the future, you're going to have to end this situation, and you have to end it very quickly.
I think you answered why China is not helping, right? I mean, as the old saying goes, never interrupt when your enemy is making a mistake. Now, if it's a mistake, not mistake, we can argue, William. But I mean, I think we've spoken about this in the past. But let's just sort of go back to markets, William, if you will. And the new Fed chair is going to be in the hot seat soon. There's apparently a ceremony at the White House later scheduled for later this Friday. So unusual. We don't usually see those. How different will this new Fed chair be, and what does it mean for things like precious metals, gold specifically, and of course, I mean, risk assets like equities as well?
I think that the question for Governor Warsh and Fed Chair Warsh to be considered is whether or not inflation really is going to be a longer term process that is anchoring the inflation expectations of the marketplace. So far, the long-term inflation expectations are starting to rise, but they've only risen by about a quarter point or so, and they've kind of flattened out. And I think the jury's out as to whether or not the energy situation, the shortage situation that's developing, will persist beyond any kind of in any significant way that monetary policy has to act. And that puts Warsh in a very awkward position where he cannot implement the Warsh maneuver I've talked to you about many times, which is to say lower rates and contract the balance sheet very quickly. The argument that he's going to have to make isn't going to be very effective if actual inflation doesn't come down or stabilize. So in terms of monetary policy ahead and for investors, it'll be more of the same. It'll be more on hold. I think that all this talk about a rate hike is ridiculous. Unless if we see the inflation expectations start to unanchor and rise by half a point or more in the long term, in the 5 years and the 10-year forwards, I don't think we're going to the market should consider a rate hike to be very serious.
All right, short conversation, William, but thank you very much for joining us on CNBC TV18. Let's tell our viewers then the interactions lined up on the show today. 9 a.m. we'll be joined by Dayanand Mittal of JM Financial Institutions to put the spotlight on the oil and gas sector, the price hikes, the earnings. 9:20, Nimesh Chandan of Bajaj Finserv AMC will be a market master for the day. 9:40, the management of Genus Power Infra will join in. And we'll get into details about the smart metering, what's happening across various states. Towards the end of the show, Yves Bonzen of Julius Baer, the global CIO, will join in to talk about the impact of the ongoing geopolitical tensions on markets and more.
Well, time to slip into a short break. We've got a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. For the time being, I give you a sneak peek. IOC, OMCs, GE Vernova TND, IGL, Astral, JK Paper, Adani Group stocks, Eicher Motors, and JSW Steel. All of them will be reacting to positive news flow. On the flip side, you have Afcons Infra that will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. You're watching Bazaar Morning Call. It's time now to talk stocks. Our entire research team is standing by with CNBC TV 18's list of top stocks for the day. Good morning, girls. Sona, let me begin with you. First on the IOC numbers. How did they look? How did it compare with HPCL? And then even on oil marketing companies, 1 week, 2 price hikes.
Okay, let's start with the numbers first. IOCL numbers like HPCL were a beat on all parameters. Of course, it's led by a lot of inventory gains, some of the compensation they would have received on LPG, and their petrochemical segment did well this time versus an expectation of a loss. So revenues up 1.5% sequentially. EBITDA was flat at 20,716 crore rupees, but much better than the poll. Margins at 9.9% versus a poll of 6.3%. Profits were down 6%, but again, they were better than the poll, coming in at 11,377 crore rupees. The GRMs, they have not been reported by the company yet, so we'll understand that in the conference call at 3 p.m. today. In terms of EBIT, petroleum products increased quarter on quarter. Petchem was a profit this time versus a loss in the quarter gone by. Gas business saw loss. That was also an impairment that the company had taken in the quarter gone by. Now to the price hike. Calibrated price hikes have come back. After 3 rupee per litre price hike last week, diesel prices have been increased by 91 paisa per litre. Petrol prices increased by 87 paisa per litre across the country. And OMCs, remember in yesterday's briefing, the oil ministry did indicate are making losses of 750 crore per day now versus 1,000 crore per day that they were making before the 3 rupee price hike. So yes, the losses have reduced, but the losses are still there. So maybe more price hikes would be needed. The calculation calculations indicate around 11 to 12 for petrol, around 20 rupees for diesel. But yes, this will come as a breather for oil marketing companies because finally they are able to recoup some of the losses that they were making on the marketing front.
Got it. Okay, all right. Thanks a lot for that, Sonal. Well, let's across to Vinny. She's here to tell us about GE Vernova TNT. Morning, Vinny.
Hi, good morning. So the company has actually reported a good set of numbers in Q4 FY26 as well. Revenue came largely in line with expectations, but saw growth of around 42% on a year-on-year basis. Now, what came in as a positive surprise was the margins. EBITDA margins that came in at 27% versus last year of 21.8%. And expectation was somewhere around 25%, so much better than what the street was expecting. And this is a main indicator that we'll keep an eye out on because the street was worried that maybe the margins for the company had peaked. Now, they've still managed to do well. Gross margins overall supporting the overall performance. So operating performance very strong. Apart from that, order inflows that grew by around 188%. 8,610 crores is what the order inflows stood at for Q4 FY26. But do not forget, we know that big order, HVDC order of South Olpad, that is also included in this, and that was known to the market. So that has come in Q4 FY26. Now, apart from that, the company has also made an announcement of 55 crores incremental capex that they are looking at. So that is something we'll keep an eye out on. More details will come in only from the con call. But as of now, good numbers, margin beat coming in, and maybe we could see some green here despite the run-up that the stock has seen in the last 1 year.
Okay, all right, Vinny, thanks very much for that. Well, let's move on and let's focus on IGL because Sonal is here with details. Sonal, morning.
Good morning, Prashant. Well, going with green on IGL because of that mild volume beat that has come by for the company. Overall numbers were quite mixed. Revenue slightly higher than the poll at 4163 crore rupees. EBITDA was higher as well at 423 crore rupees. Profits lower at 277 crore rupees and margins came in at 10.2%. As I said, overall volumes, they were at 9.7 MMSCMD, slightly better than the poll of 9.5. They were up 5.6% YOY, around 3% on a sequential basis. Gross margins were flat on a YOY basis, a slight decline on a quarter-on-quarter basis because of a higher gas cost that the company saw this quarter. Nomura also says while overall the numbers were mixed, overall volumes were higher than the poll and they have a buy rating on the stock. Now, do remember margins, they are trying to recoup that because the company has increased CNG prices by 3 rupees per kg in 2 steps in last week, in the week gone by itself. So that will help margins a little bit. We'll speak to the management today and understand what the price hike trajectory is going forward. But for today, could see some green on IGL.
Okay, all right. Thanks a lot for that, Sonal. Well, let's go across to Upasana. She's here to tell us about some more earnings that came in overnight. Morning, Upasana.
Good morning, Nigel. First up, let me start with Astral. Well, the Q4 numbers were much below the poll estimates on all fronts across board. Now, net profits saw a growth of about 20% on year-on-year basis, while the revenue growth stood at just about 24% versus the poll of 30% growth that the street was factoring in. Margins saw an uptick of just about 30 basis points at 18.3 versus the poll of 19.2, so much below as compared to the poll numbers. Now, plumbing business, which is the key of the company, FY26 volumes here saw an uptick of nearly about 16% on year-on-year basis. Next up is Afcons Infra. Overall, it's been a weak set for the company. Company has missed its own reduced FY26 guidance. Revenue down about 19%. Margins stood at just about 1.6% versus 9.1% on year-on-year basis. Company has also reported a net loss this time around of nearly about 89 crores versus the net profit of 111 crores. Order book of the company stands at 32,496 crores and FY26 order inflow has come in at nearly about 4,100 crore with a guidance given by the company earlier in Q3 of 20,000 crore. So a big miss on that front as well. And if we talk about the FY26 revenue growth, it is down 5% versus the guidance of 5% growth that the company had guided in Q3. So overall, it's a miss on a big time. Now coming to JK Papers, overall it's been a good quarter for the company. Revenue has seen an uptick of 17%. EBITDA margins have also expanded from 13% to 14%, and PAT has also seen an uptick of nearly about 32% on year-on-year basis. Company in terms of volumes have also achieved its highest ever paper and board sale volumes in terms of 8.19 lakh MT during FY26, and company has also maintained its leadership position is what they have highlighted. So overall, going a green with JK Paper and red for both, that is Astral and Afcons Infra.
Thank you very much for that. For more earnings, for more stocks and news, Sudarshan now joins in.
So first one, I'll start with Adani Group. There are two cases for which we have got the outcome from US court. So in the first case, US court has dismissed the criminal charges against Adani's, Gautam Adani, Sagar Adani, Vineet Jain and other defendants, and that is done with prejudice. So with prejudice is a legal term meaning an action or decision is final, permanent and binding. And this comes after US DOJ, that is Department of Justice, had submitted the motion seeking dismissal of indictment with prejudice. It has said it has reviewed and decided not to devote further resources to these criminal charges. In the second case, which was related to Iran's sanctions, US Department of Treasury has agreed to a $275 million settlement with Adani Enterprises. So will be positive for entire Adani Group companies. Second news related to Eicher Motors. Royal Enfield is going to secure a land parcel in Tirupati in Andhra Pradesh for a greenfield manufacturing facility with an investment of 2,500 crore. So company is currently operating 4 manufacturing facilities in Tamil Nadu, and recently it had said that one of the facilities will be expanded, and with that capacity expansion will increase to 2 million units from the current capacity of 1.46 million. So that is also positive for Eicher Motors. Last one is JSW Steel. Yesterday it had seen block deals of almost 3,150 crore rupees, in which JSW Energy had sold 2.5 crore shares. Yesterday in the evening we got the block deal data and we got to know the name of buyers. GQG had bought 1.5 crore shares at a price of 1,260 rupees per share, and another buyer was SBI Mutual Fund, which bought 1 crore share. So I'm going with green for JSW Steel.
All right. Big capacity expansion plans there, and we had the management with us earlier. Thanks very much. So for that, here's a quick recap of the stocks with positive news flow. IOC, oil marketing companies, G, Vernova, TND, IGL, Astral, JK Paper, Adani Group's names, Eicher, JSW Steel is Sud mentioned. Afcons is the only name with some negative news flow. So that's a lineup of top 10 names. Manisha is here with a roundup of the commodities space. Manisha, good morning.
Morning, and thank you for that. I'll start with the crude oil prices because we've seen that slipping below $110 a barrel. Yesterday, overnight, there was a point that we traded around 112 as well. With U.S. holding off on a planned attack on Iran on Tuesday, and then this is being done on request from Saudi Arab, Qatar and UAE, is something that has led to some geopolitical premium coming off the prices. U.S. also allowing sale of Russian oil and products on tankers till 17th of June seems to have done the trick as well, because Asia, much of Asia will get that oil in now. So availability is something that the prices are seeping in. With the slight decline in energy, the money seems to be rotating back in case of the metal prices therein. So you have the gold and silver prices trading on the positive side, with hopes growing that the U.S. and Iran may return to negotiations. Markets also are waiting for the FOMC minutes that comes in this week, and the flash US PMI also will tell us on where the markets are headed from here. HRC steel is trading at 28-month highs. Copper prices gained up by 2% overnight. Aluminum continues to outperform. Zinc is trading in the positive as well. So energy has seen a decline, but metals back in favor.
Thank you very much for that update. We will get into a break. On the other side, we'll connect with Hindustan Copper Sanjeev Kumar Singh to discuss the company's performance in the quarter gone by. Later, we'll connect with Mayuresh Joshi for some fundamental stock talk. Stay tuned.
Well, Hindustan Copper, that's the first management on the show. It reported a good set of numbers in quarter 4. It also recorded record profits, in the past quarter. To discuss, though, what's the way ahead, we're joined by Sanjeev Kumar Singh, the Chairman and Managing Director of the company. Hi, Mr. Singh. Thanks a lot for joining in here on CNBC-TV18. It was a record quarter, but tell us about the way ahead. What's the copper ore volume guidance you're giving us in FY27 from around the 3.7 million tons you did in FY26? And more importantly, will the MIC grade improve from approximately 0.75%?
The production is concerned, from 3.67 next year, we'll be producing about 4.7 million tons. And the breakup is that 3 million will come from Malanchkhan, 1.2 will come from Khetri mines, and 0.5 will come from Ghatshila mines of Jharkhand. In fact, in the last interview, I said in 26-27, the full portion of the Ghatshila mines will come in our results. It will give you the full picture. The full picture of the Ghatshila will come in 26-27. So this is my growth plan. It is about 25 to 28% with respect to current year. And as far as grade is concerned, we are trying to improvise, but see, it's a nature's deposit. Whatever we get, we mine it. But we'll try to see that it is around 0.76, 0.77. We improvise on that. But as you know, we are going down. It's a worldwide phenomena. If you see that grades have gone down as you have deepened the mines.
Got that, Mr. Singh, in terms of ore production, at around 4.7 million tons. But what grade are you factoring in, and what will it mean in terms of metal in concentrate volumes for the coming fiscal?
Yeah. 36,000 tons. In fact, it will be slightly, not 35, but it will be in the range of 33, 34, 33 plus. And 33 plus, yeah. That should be, because see, suddenly if a grade comes down, that hampers a lot. We assume at the initial year, in the April, we assume X grade. And suppose it comes to 0.9X, then the direct effect of the grade is on the production of MIC.
Okay, so we've got the volume factor then out of the way. 33,000 tons is what we're looking at in terms of MIC volumes. What is the copper price range, though, we should work with for the coming fiscal? Is there a bit of a shortage in the global markets?
Well, that is true. In fact, I had promised you that we'll maintain the EBITDA margin around 40%. We have maintained that. And similarly, the momentum which has been started in 25-26, I can assure you this will go on, and we expect to continue this momentum, even in the Q1 also, or the whole year of 26-27.
Yes, sir, but what is the LME price range you're working with? And if you could tell us about the margin outlook, because in the past quarter, the margins are already at 50%. You're talking about 40%.
The price, I can't say as of now because it's very volatile. But as far as margins are concerned, EBITDA margins, we will maintain that 40% plus. Will maintain that.
Okay, got that. You're being conservative, I think, yet again at around 40% margins, but I'll take that point on board. In terms of the rupee depreciation, the street is a little bit cautious. Everyone's a little bit somber with regard to the way the rupee has been moving. But I understand it's a positive for Hindustan Copper, I guess, because your costs are in rupees, but the weaker rupee will aid your realizations. So could you give us a number with regard to how it helps you? And also, do you export any concentrate?
See, definitely the depreciation of rupee is very good for Hindustan Copper. But as a SCL team member, I can say it's good. But as an Indian, I think it's not good because we are paying more dollars outside. And the economy is in real trouble, I should say. But as far as Hindustan Copper is concerned, really, we are in good picture. And 1 rupee depreciation of $1, I had told you last time, we get an effect of 15 to 20 crores plus. Secondly, you had asked me about this, the grade or what you mentioned. Nowadays, we are not exporting. We used to export even in the last year, in the third quarter or second quarter, we had exported some material. But we don't try to export because here there is a huge demand in the country itself. And it's sold on the LME, so no question of to export when there is a huge demand in the Indian market.
Okay, so domestic focus is what you're telling us, and the Indian rupee depreciation is actually good for you, 15 to 20 crores. Got that. Is there a fundraise, though, in the works? You've laid out an ambitious CapEx plan. Is there a QIP that you're looking at?
See, as of now, I can tell you for 26-27, the funding is there through internal accruals. We have good amount of money with us. 27-28 also, the majority of the fundings will be through internal accruals. We have got our own money, so we'll be spending on that CapEx. But we have made the provisions for QIP, for bonds, and we have taken, there is a provision, but I don't think that will be needing in this year or even the next year also.
Okay, all right, Mr. Singh, that we've got most of the details with regard to the copper business. Now, reports suggest that tailings in Jharkhand have uranium. And there are reports also that are suggesting that you're looking at extracting uranium and you're partnering with the Uranium Corporation of India. Give us some details on this particular venture that you're looking at.
We have reached to an agreement with UCIL that we will give them our tailings, which we are mining there in those 3 mines as of now. And if any of the other mine also comes in near future, we'll share the tailings with them. And they will make up a uranium recovery plant. And from that recovery plant, they will extract the uranium which is there. That will be free of cost because all mining costs will be incurred by Hindustan Copper. And then they will return back the tailings which will put in back to the mine, so this has been already agreed, and they are moving to these proposals to their boards and all that, and soon they will be putting up a plant in Kachila. We have provided the land and other things already. It is there. It was earlier also the same area we have given. Even if they need more area, we are ready to give that. So that will be given to them. So this is one of the important things which we should think from the country's perspective, from the India's perspective, I should say. If you generate uranium from these tailings also, that will come to country's help.
Got it. Okay. Mr. Singh, it all boils down to what net profit you're going to do. So what is the guidance for FY27 on net profit? For the next few years, you've laid out this guidance of 600 to 700 crores. It doesn't cut, sir, going by the production levels, the current prices as well. In fact, Anand Rathi is a brokerage that is estimating around 1,650 to around 1,700 crore rupees of net profit. Is it gettable?
No, don't commit any figures from me. But I tell you, as a SCL team member, I can rather promise to you that we will definitely do better than this year. This is 100%, I'm sure we will do it. See, SCL team is a wonderful team. In fact, you are monitoring us for last 2 years. We will do something definitely better than 25-26. But don't ask me for any figures on PAT.
Push you a little bit, sir. Can we assume, that your net profit goes up big time in FY27? For example, last year you did around 1,000 crores. So 50% higher in FY27 versus FY26?
I'm not that good in mathematics, but I can tell you one thing. We are expected to do much better than what we have done in 25-26. I can assure you from this particular platform.
I think, sir, you're following that mantra, under-promising and over-delivering, but we'll take that point on board. It'll just be better. So it'll be more than 1,000 crores in this year. Final question, sir. It's always a temptation. When things are looking so good, a promoter entity could look to take off some money off the table. Have you heard about a probable OFS from the government of India?
No, Nigel, I don't have any information and I'm not capable of answering these particular questions. I'm just after production, MIC, and the support which I'm getting from the Government of India and respective state governments. I'm after that. I don't have any answer to this.
Well, it's a pleasure talking to you, Mr. Singh. Thanks a lot for speaking to us exclusively to CNBC-TV18, and thanks for giving us the guidance. We'll hold you to some of these numbers, and I think on the profit number, there could be a surprise in the works. But thanks for giving us those details. Well, let's get in Mayuresh Joshi, Director Research Markets Midinda, who joins us on the show. Hi, Mayuresh. Good morning. Good to see you in. Let's talk about Hindustan Copper then. That was one of the metal stocks that did well in yesterday's trading session. Numbers look good. The management is, talking about very, very subdued estimates going by what they're saying. Not just guiding for a better FY27. It should be much, much better going by the prices and volumes. What is your take on the stock?
Morning, Nigel. I think very conservative in my opinion as well. And I think you've asked all the right questions to the management right now. I think the expectations in terms of the LME spot prices as far as copper is concerned at this juncture, and if you probably take an average of the past quarter at around 13,500 metric ton, and even if one probably assumes that a lot of mine shutdowns that you've seen globally over the past few quarters, partially I think the production starts coming up, supply starts improving as we speak over the next few quarters. And there is some element of a correction in terms of the spot LME prices as we see right now. With the expectations of volumes ramping up for Hindustan Copper quite significantly, and the value adds that they're probably also entering. My own sense is that it's a very, very conservative estimate in terms of both EBITDA as well as the profitability that the management is probably putting forth. I think it's more in terms of having a cautious stance. whether there is accelerated supply that probably comes through and copper prices come down quite significantly, offsetting all the gains that we've seen in the recent few weeks. But in my opinion, I think a pure copper play, expectations in terms of demand applications, the drivers probably remaining AI, data centers, etc., EVs, I think that will prop up copper volumes over the next few quarters and years as we speak. So anybody putting in the stock insurance.
156% rally in the last 1 year for Hindustan Copper. Mayuresh, Adani Group stocks. Adani Power has rallied 53% since the start of the year. Adani Green is up 35%. Adani Enterprises Ports have moved up 20-25%. And now it looks like all that litigation, with the US DOJ, SEC now seems to be dropped with prejudice. But do you still think that this was an overhang on the stock prices or not really? Because you can see the way the stocks have moved up and therefore it doesn't matter too much, or it does matter in terms of capital raising, foreign capital raising from the US. How would you assess this news and the impact?
Morning, Rima. No, I think a large part of this news was getting gestated into the market. And again, I think a big overhang is probably now done and dusted with. Now, what this also does is that a lot of plans in terms of raising capital overseas had been put on hold. And therefore, once we receive a complete resolution of sorts on this issue, and this is put to rest, I think the Adani Group probably has far more options and optionalities available to raise capital. They had dropped a lot of these plans in lieu of a lot of charges coming through, starting from Hindenburg to the latest one. And therefore, I think the cost of raising capital at a much diversified means in the first place, and more in terms of a more cost-effective manner in terms of the blended cost of capital raise, both from domestic and global sources combined together, will put them in a strong position across the capex plans that they've got. Obviously, I think the leverage position across the group has improved quite significantly as we speak. And therefore, this news is sentimentally very, very positive for the Adani Group stocks. But again, a lot of that is already in the price.
Okay, all right. You told us about Hindustan Copper. What about Tata Steel? Actually, the numbers looked good. It came out on a bad day and the stock had already seen a run-up. But going by the numbers, going by the way steel prices have firmed up, I think there's a bit of a structural change that's taking place in China. They're producing less and they're exporting less. That's good for global steel prices. And in India, the per capita consumption of steel has moved to 100 kgs. Now, that's a sharp uptick from what we're seeing. And the global averages is 220 kgs, which we will start heading in that direction since we have crossed the century mark. What's your view on Tata Steel among the Ferris pack? What do you like?
I think SAIL also gave a good set of numbers.
Yes,
therefore, I think my own sense is that Ferris has performed really well. Tata Steel is something that we continue holding in our global portfolios. And you are absolutely right. I think the expectations in terms of its overseas operations, specifically what happens with the UK and Netherlands, I think the entire push mode that is probably happening in terms of producing green steel, Tata Steel has probably embarked upon that. In lieu of both the global regulatory standards as well as ensuring that they probably also stick to their strategic goal plan of producing green steel over the next few quarters and years. In terms of expectations of realization growth, obviously, I think the Chinese factor when it comes to steel production and consumption, and generally the metal space as a whole, becomes a very, very critical point. As we see it and as we are interacting with our Chinese team, I think the expectation is that over the next couple of quarters, to say the least, I think it will be more inward focused as we speak, rather than dumping a large part of these commodities across the globe. And therefore, I think LME prices should remain relatively stable. The integrated operations and the mining part of it, specifically when it comes to the domestic part, should see significant amount of value addition as we go forward. And therefore, I think expectations of domestic volume stroke standalone revenue and EBITDA growth should be reasonable. And the subsidies have also performed reasonably well. So I think we see no cause of concern as far as numbers are concerned and continue holding Tata Steel.
Got it. Okay, all right. Thanks a lot for that, Mayuresh. Request you to stay with us for the time being. We'll slip into a short break. Come back. Mayuresh will continue our chat that we were having. We'll also be joined by our technical experts. Nitesh and Sudarshan are waiting for us.
Welcome back. There's 12 minutes to go for the pre-open session. Let's just quickly look at the GIFT Nifty. Any change? Whoa, this is big 1.5 point change on the index this morning as we are looking at the market open. So lack of triggers, I mean, and no real new information, news flow, as I was saying, which helps things around and will move things around in a significant way. Well, in terms of single stocks, there's lots of action. You know, SUD yesterday put out a long list of stocks which have seen big moves post earnings. I mean, day zero moves, so there's been no dearth of those. Hormuz is here as always with the big movers from just yesterday. Stuff which saw price action with heavy volumes as well. Hormuz, take it away.
Morning, Prashant. Unsurprisingly, their earnings reactions as well this time around. Amber Enterprises was the big loser in yesterday's trading session. In fact, the stock was down 16%. It's the biggest single-day fall that the stock has seen in 4 years, back all the way to May of 2022. The premiums on the 7,000 put option, it was the most traded option yesterday, up almost 5x in yesterday's trading session as well. The volumes yesterday were the highest in 6 months. Over 21 lakh shares were traded. The 20-day average was around 3 lakh shares, so 7x its 20-day average. And 20% of those shares were marked for delivery. So 4.5 lakh shares for delivery. The 20-day average is less than a lakh. So it's sort of 5x their 20-day average on this regard as well. The stock is down 20% from its 52-week high of close to 9,000 rupees that it had hit just on the 7th of May. Of course, most of it came in yesterday's trading session. GE Shipping was the one that the stock did well on Friday, extended those gains on Monday as well. Here too, it was the biggest single-day gain in 4 years. And it was the stock is up 14% in the last 2 sessions. It snapped a 4-day losing streak on Friday. In fact, Monday's volumes were almost double that of last Friday. And the volumes, if you put together Friday and Monday's volumes, they are the sum total of the last 44 sessions combined. In fact, on Monday, we had less than 2 crore shares that were traded. The 20-day average is less than 11 lakh shares, and 11% of those were marked for delivery. So around 20.5 lakh shares for delivery. The 20-day average here is just 3 lakh shares. And in fact, GE Shipping was the most traded stock on the Nifty 500 on Monday, and the stock in fact hit a 52-week high, up over 50% so far in 2026. And another earnings reaction yesterday was Gland Pharma. On the positive side, the stock was up 15%, with the biggest single-day gain since August of 2023. In fact, it was the first time in almost 9 months that the stock closed above the mark of 2100. It was the top Nifty 500 gainer on Monday. In fact, the volumes yesterday were the sum of the last 67 sessions put together. The volumes were the highest since June of 2024, and over 70 lakh shares traded. The 20-day average is only 1.5 lakh, and out of those, close to 20% were marked for delivery. So 13 lakh shares for delivery. The 20-day average is less than 1 lakh here as well, and this too hit a 52-week high in Monday's trading session, extending its 2026 gains to over 25%.
Thank you very much for that. Mayuresh, you want to comment on Amber? That was the big miss yesterday. What's the call?
No, Remus, I think we have not added that in our portfolios, and we are waiting and watching. Again, I think the expectations in earnings delivery for Amber, I think that was a huge miss as far as the numbers are concerned. And therefore, I think the hope is that with a lot of PLI expected to come through, the added benefits in terms of orders flowing, the way of these EMS manufacturers to a large extent, and the expectations in terms of their own products actually improving the market share and the margins as well is something to be watched out for. But that is, I think, we're just shying away from it.
Okay. What about the other momentum stocks that Hormuz was talking about? GE Shipping is one, which saw its single biggest day gain yesterday, up since May of 2022. Stock has gained about 14% in the last 2 trading sessions. And the other one is Gland Pharma. Do you all track it?
Absolutely. I think as a clear disclaimer, G is something that we continue holding in our local and global portfolios. And in fact, this entire gambit, right? If you look at Shipping Corporation, G Shipping, CMAC has come with a great set of numbers as well. And in fact, it all started with Bhari, I think the South Arabian oil tanker company, which has a large VLCC and gas and chemical tanker business. I think outstanding set of numbers, and their commentary was mind-blowing as well. So the expectations in terms of the after effects of the Middle East crisis has actually put up or pushed up spot prices when it comes either for bulk shipping, bulk ships, VLCCs, gas tankers as well, sheerly by the shortage of it. But even if you go beyond this crisis, I think the expectations of fleet addition are expected to be marginal in nature. The expectations of scrapping of old ships might probably just go up a tad bit. And therefore, the dead fleet, or the cold fleet, as they call it in the shipping industry, is significantly higher as we speak. Again, the offshore business for both the CMAC as well as SCI, I think that can have some element of an accelerated run. Because what we've seen probably emerging from this crisis is that a lot more exploration will start probably happening, giving a lot more impetus to the ancillary segment of the offshore segment as we see it. So yeah, I think a little biased, but continually being positive on this. Gland is obviously one number from the pharma space, which was outstanding as well. I think the expectations in terms of more launches coming through the semaglutide launch and the management being very, very hopeful of higher EBITDA margins is something that can keep the stock in good stead. But we don't hold this stock in our portfolio.
Okay, all right. Any view on the cement pack, Mayuresh? You have some of these smaller guys that have delivered pretty okay numbers. The big boy Ultratech Cement, well, that execution has been par excellence. But what's your view in terms of a pecking order? Ultratech has been the big daddy. Shree Cement has been a big underperformer of late. And Ambuja Cements as well has come off drastically from the top. Would you go with some of these big boys or would you look down the order?
So Nigel, as far as the cement pack is concerned, I think we still continue remaining with the leadership stocks because our belief is that the industry is clearly consolidating as we speak. In terms of both organic and inorganic growth, when it comes to capacity additions, I think it will be very, very calibrated, and therefore I think pricing should remain in favor of these cement players. Obviously, input costs have gone higher, and therefore the Q1 numbers will be a little bit on the softer side. They will be passing it through, but not completely. But they're trying to compensate that in terms of both the power consumption that is probably happening internally as we speak, and creating these hubs close to delivery centers, which reduces the overall logistics costs as well. Having said that, I think Ultratech is something that the ratings and rankings at Markets with India still exhibit very, very strong growth levers. And therefore, this is one stock that we still continue remaining optimistic about. And within the mid-cap pack, as I've always maintained, JK Cement, which has a good mix of white and grey cement, should continue to.
Thank you. Stay on, Mayuresh. We need to slip into a very short break. We'll come back and connect with Dayanand Mittal of JM Financial Institutional Securities. We'll put the spotlight on the oil and gas sector. Stay tuned.
Welcome back. 17 minutes to go for the market open, and we'll get a sense of the rupee before we'll get a sense of the actual open on the market. And I guess the number one cue is what's happening with the currency. Mitesh is with us. So Sudarshan, gentlemen, good morning. Great to have both of you here. Thanks for joining. And so yesterday, of course, from the lows, there was a powerful 300-point move. Sudarshan, where does it leave us, and how would you trade it?
Well, yesterday's decline was okay, but that powerful move was completely unanticipated, at least for me. So I remain surprised.
For everyone, Sudarshan.
All right.
Yeah.
Now, the Nifty has a trading range, and the upper end of the range is 23,800. It's very difficult now to create a trade inside this range. And therefore, for me, if a breakout above 23,800 happens, I would like to go long. Till then, this is not even a shorting opportunity. There is a news event which we know nothing about. So the only trade is a breakout above 2300 is a long trade. Otherwise, nothing.
Got that. Mitesh is also joining in. Mitesh, the action on the index was very strong with that recovery that we had. But the small caps underperformed. The small cap index was down 1.5% nearly. The advanced decline ratio was 1:3. What's your call for today? Do you sense a breakout above?
See, my understanding is that very clearly, I think, this is a market which is slightly kind of ranged and not giving a directional bias. So yesterday, we kind of, on the Nifty, hit the lows or close to the lows which we made on the 13th of May, which is Wednesday, which is around 23,260 was the low then, and 23,300 was the low yesterday. So 23,300, 23,800 is what I'm looking at as the potential range. there's also a condition of moving averages around this 23,850-900 zone. So basically 23,800, 900. I think once this is cleared, then we'll have a stronger move. Otherwise, it will still be choppy and a range kind of market.
All right, let's talk stocks then. Mitesh, what would you go with?
Yeah. On the stock side, I have a mix of buys and sells. On the buying side is Page Industries, which is a buy with a stop below 37,000 for targets of around 38,500. Coforge is a buy with a stop at 1324 for targets of around 1400. A sell on NTPC with a stop at 390 targets of 375. And a sell on Delivery, which kind of declined after good numbers. That's not a very positive sign. So Delivery is a sell with the stop at 462 half for targets of 440.
Got that. Sudarshan, what about you?
I'll have two buys and two sells. Nykaa is a buy with a stop under 265. The stock is consolidating after a very decent up move. That consolidation gives the impression of breaking on the upside. PI Industries is also a buy, absolutely similar pattern, uptrend, consolidation, likely breakout on the upside. Buy with a stop under 3,040. Paytm is a short with a stop above 1130. And Dabur is a short with a stop above 465. So two buys and two sells.
Okay. Got that. Any breakdown that you're seeing in Amber Enterprises? That's the big stock which collapsed yesterday, 15% lower. Sudarshan, would you have a trade?
Well, I have a trade, but that would be a buying trade because the stock chart is otherwise very conducive. Now, you see, sometimes stocks react to news events and then perhaps overreact. So once the dust settles down, it's a buying opportunity.
Yesterday, Amber, Sirma sold off. Keynes is down some 30% in 6 days. CG Power was down sharply. So lots of these, players in the EMS manufacturing kind of spaces. I mean, actually, even names like Uno Minda, Data Patterns, they was just generally selling in a lot of these names. Mitesh, any of the other names that I mentioned apart from Amber strike out to you?
Yeah. Amber is something, which had a big breakdown yesterday, and I was looking at the charts and it opened some 7% gap down, and then I didn't give a sell, but I think the breakdown suggests that the stock will head towards 6,600 to about 6,500, 6,480. I think that's the zone which I'm looking at. On the others, I think Sirma has come to its support levels after correcting from 1150 to about 960, 970 now. That's where the 34-day exponential average is placed. That's also, a little below his weekly pivot at about 900 levels. So around 950, 900 in the stock can do some base building. I think it will go through a good reversal.
Got that. TVS Motor, Mitesh, any thoughts? There was news yesterday as well. It was ended slightly lower. It's been a very strong stock otherwise. How are the charts looking?
Yeah. TVS Motor has had, some negative crossover, which is not possible, which is obviously, means that the stock price could go through correction. But if you look at the historical price, in the month of March, the stock did some good consolidation around this 32.80, 32.70 mark. And I think if it breaks that, then I think it would start at least a negative or a corrective trend with a minimum target of 30.60 to about 38.
Okay. Gentlemen, we'll come back to you. The rupee continues to open on the weaker side, 96.37. I think the low yesterday was 96.39. So we're pretty much there with the opening today, 96.38. Let's put the spotlight now on the oil and gas space. Dayanand Mittal, oil and gas telecom research analyst at JM Financial, now joins in on the show. Dayanand, morning and thanks for joining in. This is Rima here. Second price hike for the oil marketing companies in terms of petrol and diesel in a span of 1 week. And this time the quantum is lower, 80, 90 paise. So it doesn't make splashy headlines. But if you continue to do these periodic hikes, it will go a long way in recovering the under recoveries. Do you expect more such smaller hikes, but coming more frequently?
Yeah, good morning. Yes, so this is positive for OMCs. So original expectation when this fuel price hike rumor was going on that given OMCs are losing somewhere in the range of 15 to 17 rupee per liter to get back to normalized earnings, there would be at least a 5 rupee hike or so. So given 3 rupee hike came in, 90 paisa today, maybe some small follow-ups which might happen. So it will at least help to bridge at least 1/3 of what they would ideally like to do. Can government do sharper price hike, let's say 10 rupee price hike? Maybe yes, over the next couple of months, if let's say the Strait of Hormuz issue continues to remain a challenge for us and oil remains upwards of 110. So broadly at $90 Brent is where OMCs earn their normalized earnings, and at 100 or $102 Brent is where they reach a position where their EBITDA is zero. Currently, obviously, they're incurring huge EBITDA losses.
So you expect another 10 rupee price hike over the course of the next few months if crude remains at current levels of 109?
No, definitely not 10 rupees. Given OMCs have a strong balance sheet after last 2-3 years of strong earnings, the net debt to equity is down to 0.5, 0.6 versus peak net debt to equity of 1.2. So they have the ability to take almost like a 2 lakh crore debt in case the worst were to be factored in. So they can absorb this 70,000-80,000 crore of quarterly losses for 2-3 quarters. And hence, I think if let's say crude stays upwards of 110, consumers will take about 1/3, maybe 40-50% of the hit. OMCs will have to absorb 5, 7, 10 rupees hit. So I think another 2-3 rupee hike maybe over next few weeks, but not 10 rupee for sure.
I mean, they are backed by the sovereign, so they can take they can see losses for long periods of time. That's fine, but they're also listed, and that's where the problem from a shareholder point of view. You know, this argument there, Anand, which is made, and I was wondering if you've thought about it, which is like prices were unchanged, even as retail prices were unchanged, even though international prices fell for the last few years. So, you know, they made gains and now they should actually pick up the burden. How would you respond to it? I mean, at a basic level, I mean, it's not as if the money accumulated is sitting there, right? I mean, it was paid out, share of profits, dividends, etc. I mean, just your thoughts.
Yeah, so to your first question in terms of sovereign and its unlimited debt raising ability, but point to note here is they are the ones who are incurring huge capex to set up refining petrochemical plants, many of which are strategic from a country perspective and maybe not be a commercial in entirety. So they need to have a decent balance sheet size to do those kind of capex despite being sovereign. Second, to your point of, yes, they made good money last 2-3 years, FY24 to 26. But that was on the backdrop of they're losing almost like 80,000 to 90,000 crore in FY23 when crude jumped upwards of $100 post-Russia crisis. So a large part of that last 3 years' earnings went to recoup those losses. Yes, but still on a net basis, they still earned higher money. Difficult to put a number, but yes, they earned higher, and hence next probably FY27 is where probably it would be partly used by the government to kind of rescue consumers to some extent. So yeah, partly the argument makes sense, but a large part was to recoup the FY23 losses also.
And that FY23 losses perhaps was maybe justified because there was a period of gain sometime in the past. It depends on how far you want to stretch that timeline too, right? But it's always short bursts of profits and then losses, and this has of course been a problem with oil marketing companies. But across your coverage universe, Dayanand, for investors, is anything looking like a opportunity? Is anything looking like it's pricing in the worst? I'm not just talking about OMCs.
Yeah, so we continue to like ONGC, Oil India. We think one thing which government has realized is oil and gas exploration. We can't just leave it as it is. We need to get serious. This crisis is further exposed at risk. Government has been taking measures to attract global oil majors like BP, Shell, Exxon. So far, there haven't been much success. Maybe BP partnership with ONGC in the Mumbai High Field was one example. We need much more similar kind of a partnership or investment with global oil majors, so that at least we should be sure that if we genuinely don't have oil and gas reserves, or we haven't explored much, and maybe our companies, because they're not technologically as similar to ONGC, BP. So is it because of that? So windfall tax for ONGC Oil India, which is a key market concern, we don't see that risk playing out. So we think ONGC Oil India is still discounting about $70 odd net crude realization. I think market should, given our view that crude will remain around $85 for a year, even after Strait opens, and maybe $75 thereafter. I think ONGC All India still has a 15% upside even after recent up moves.
Do you want to quickly comment on the numbers? The numbers that came through from IOC and IGL and BPCL is later today.
Yeah, so IGL numbers, given the muted expectations, were slightly better. Volume growth has been a key challenge because of EV-related impact in Delhi, but volume growth was up like 6% odd YOY, so some shy of relief. Needs to understand from today's call, afternoon call, whether this is sustainable. Can they do 8-10% or not? Margin, they had a couple of one-off gains because of cut in transmission tariffs, so margin was also slightly better. IOCL, they haven't declared the GRM numbers as of now. The overall headline numbers were better than our sense street expectation, maybe similar to what HPCL did because of marketing earning and probably largely because of low-cost inventory that all these OMCs have during Feb month, which they would have accumulated and used during the quarter. So decent number. For OMCs, obviously, the key challenge is the losses that they are incurring right now. So probably last quarter numbers may be largely ignored by the market as of now.
All right, we'll leave the conversation here. Thank you very much for joining in. It's 9:10. Time to get back. Sudarshan and Mitesh back on the show. Sudarshan, your call?
It's Nykaa. Buy Nykaa with a stop under 265.
Okay. Mitesh, yours?
I'll also go with a buy call and sorry, just one. And that will be paid industry. So buy here with a stop at about or below 37,000 for targets of 38,000.
Okay, so two consumer names on your list, Nykaa and Page Industries. Gentlemen, thank you. We'll come back to you. For now, let's go across to our Sudarshan for the brokerage call of the day.
So we have two brokerage notes on Vodafone Idea from Nomura and CLSA. Both these brokerages have downgraded Vodafone Idea but have increased the target price. So first talk about Nomura, downgrade to neutral and target price is increased to 12.60 rupees per share. It says subscriber and average revenue per user trends will be key monitorables going forward. And as far as key catalysts are concerned, first one, successful debt capital raise that if company manages to do. Second, if there is industry-wise tariff hike. Third, reversal of subscriber loss trend, and fourth, strategic equity investment if company announces going forward. CLSA has downgraded to hold and target prices increased to rupees 13 per share. Next one is CLSA has also returned Coforge. It maintains high conviction outperform with a target price of 2,075 rupees per share. It sees company as a top beneficiary of the AI cycle and strong execution reflecting after the Encora acquisition is also reflecting in the guidance that company has given for FY27, and exiting Indian government project help company improve free cash flow to profit conversion guidance, and that's the reason. There are some of the factors why CLSA is positive on the stock.
Okay. All right. Thanks for that. Just want to also address the Adani Group companies, and there's been a fair bit of news flow around it. So back to you on this.
So there are two cases for which that we have got the outcome from US courts. So first case, US court has dismissed criminal charges with prejudice against Sagar Adani, Gautam Adani and Vineet Jain. And with prejudice is a legal term, which means an action or decision is final, permanent and binding. And this comes after US DOJ, that is Department of Justice, had submitted the motion seeking dismissal of indictment with prejudice. And it has said it has reviewed the matter and decided not to devote further resources to these criminal charges against these defendants. In the second case, which was related to Iran sanctions, US Department of Treasury has agreed to $275 million settlement with Adani Enterprise. So overall, outcome from both these cases can be taken positively for Adani Group companies.
All right. Thanks very much for that. So, well, just a quick recap of the stocks that we've put out since the morning and where they're starting. JK Paper is up 6%. iShares is up about 1/3%. Astral should come up with 1/3% lower start. JSW Steel is up 0.5%. Afcon's negative 6.5%, 7% lower. There is IGL. It's all small actually, small up and small down. GE Vernova is down about 1.75%. IOC, BP, HP. We've seen small price increase. And of course, the Adani Group names will come up. So they're all starting mostly in the green. Adani Enterprises, Ports, Power. And I think there's a broader read-through for other names as well. Energy Solutions, Adani Total, Adani Green. Some of these stocks, of course, have rallied quite a bit this month and from the lows last month. as well. We've got the first rates which will start to come up on your screens, and we'll have that up coming up. 25 points, by the way, is where the Nifty is left off at the end of the pre-open session. And we'll have some of these rates start to come up. We'll keep an eye out on the EMS companies, because that was the pack which saw a fair bit of selling pressure. So that and more in a few seconds from now. So 23,675, the low yesterday was about 23,300. 23,314 or so was the low, and then of course we bounced 300 points. So starting at about 23,700 this morning, it's about 0.25% higher. Nifty Bank is up 0.33%, 53,740. The mid-cap index is up about 0.5%, 270. You got the small-cap index, which will come up, and there is about a 90-odd point pop there as well, 17,745 on the small-cap index. So about 1150 stocks are higher, and about 560 stocks are lower. The Nifty heat map is telling you how we're starting up. So Infi, Adani Enterprises, TechM, TCS, etc. starting up. And on the other side, you got Ultratech, Titan, Hindalco, which are starting in the red. So it's a more balanced kind of start, but more up than down right now. And 70 points on the Nifty to show for it. Rima.
Well, I think for the second day in a row, IT is leading the gains today. And as you could see on that heat map, it's largely the IT names right on top. So Infosys, 3% up, top gainer. Yesterday and today combined, it's added about 5.5%. Tech Mahindra, if you add yesterday's and today's gains, we're looking at a near 7% pop. TCS is moving up nicely, 2%. HCL Tech, Wipro also inching up. Maybe the street sees this news about TCS and the fact that the wage hikes have been fairly subdued as a pragmatic cost control, cost discipline shown by the company, which will go a long way in helping the company protect margins and profitability in an otherwise tough environment. So top four Nifty gainers are IT. Then you've got Adani Group stocks. Adani Enterprises has opened up nicely. So that's got a gain of 1.8%. If you skip the Adani Group stocks and IT, you've got an ITC, HDFC Life, Bajaj Finance, L&T. There are no banks which are featuring in the top gainers. The Nifty Banking Index has opened up with a gain of about 0.2%. But you've got an SBI up 0.5%. So no big moves. Kotak Mahindra Bank, in fact, has opened up in the red. On the way down, you've got Titan, you've got commodity names selling off. So ONGC is slipped. Hindalco is under pressure. Coal India is down. Ultratech Cement is down. Nestle, Power Grid, JSW Steel. So largely some consumption, and these broad commodity metal plays have opened up in the red.
Well, that's right, Rima. A few stocks that are doing well from the broader markets. Puravankara, stock is up 14%. Big move is what we're seeing on that particular name. So a spike up out there. I'm guessing maybe, in fact, numbers would have come out on that one, or there could be some kind of positive news flow on this name. But that's one of the big volume movers in today's trading session, up and about in today's trade. So big move out there. It swings to profit, actually. The revenue is up as well on a year-on-year basis. So that's the reason why that stock is reacting to its numbers. The other one is Finiotex Chemicals. Yesterday, the stock was up close to around 20%. Today, it's up another 5%. Volumes very, very high. Sparks, another stock that's up close to around 4%. Big move out there. Good volumes as well. Apollo Microsystems, my colleague Ria had told us that those numbers, in fact, look quite good. And that stock as well is doing pretty well in today's trading session. Afcons, the stock is down close to around 5% in trade today. Big downtick is what we're seeing out there. And Prime Focus as well is down close to around 2.5% in today's trading session. So that's about some of the big movers. What else is moving? Tejas Networks returning back to its winning base. The stock had a big rally and then it saw a correction. Now that's back up close to 7%. Coans is up close to around 6%. And CMAC as well up 5.5%. So fair share of winners from the broader market. So tell you what, the Nifty has started above that crucial mark, which is the 61.8% retracement level. That came in at around 23,680. Now, all eyes will be on the 50 DMA, which is around 50 points away from here. Whether or not we can get past that, that's going to be important because it can trigger a further round of short covering. So keep an eye out on that mark.
Well, if there's short covering afoot, there's a lot of shots in the system, and that can do a fair bit of heavy lifting as we go forward. But you got to have some of these headwinds, swords hanging, etc., start to disappear a little bit, look a little less onerous, and then those shots will run to cover. Otherwise, I mean, it's going to be a little bit of up and then a little bit of down kind of session as we've had for many days now. The indices are back up on your screen. Small cap index is up about 70. Mid cap index is up that much as well, about 0.5% or so. And the Nifty is holding up as well. Nimesh Chandan is with us, Chief Investment Officer at Bajaj Finserv AMC. Nimesh, good morning. Great to have you with us here. Thanks for joining in. So are we at that point where now we kind of sort of, wait for other markets to crack because they've done so well, and then, investors start to look at other markets which have not done so well? I'm talking about some in markets like Korea. There was some chatter yesterday that there was some rebalancing happening. I mean, a little bit of rebalancing out of markets like Korea into India. Is that the kind of, are those the kind of triggers now to look forward to, Nimesh? I'm not talking about, micro opportunities, and there are always micro, which we'll get to. And, with or without help from foreign investors, there is money to be made. But just on that question of foreign flows, is it going to be waiting for pain elsewhere to show up for money to come back here?
Good morning, Prashant. We are all waiting for an event, actually, the conclusion or some peace treaty in the Middle East. I think that's what will decide the path of the market and the sector or the stock selection also. A few other things help, like, more often than not, we are reminded of the cycles in the market that at some point, people become excessively pessimistic and excessively optimistic. In some of these markets, like the AI trade or so, maybe people are over-optimistic, and now you can see some corrections there. And maybe in the Indian market, people have become too pessimistic, and that's why we've seen the markets climb this wall of worry.
Nimesh, hi, but equity markets generally, globally or in India, have never been linear, and we've gone through long periods when at the index level we've done nothing. So if you go back 1994, post Harshad Mehta, the sensex peaked at about 4,500, and it didn't convincingly break above that level till that 2003 to 2008 bull market came. So you had a long period of 9 years where at the index level it did nothing. So is there a risk, because we are now seen as anti-AI, now we're getting hit on account of crude, is there a possibility that we could be in for a longer stretch of muted returns?
I believe that the fair value for Nifty would be around 27,000, which means we are ready to break through the previous high. And the pointers, when we look at, say, the fundamental cycle, whether you look at economic growth, whether you look at earnings growth, whether you look at credit growth, all were pointing towards the improvement. Now, because of this crisis, we've hit a speed breaker. The question is, how much time will it take to resolve? But otherwise, this crisis somehow has hit the Achilles heel of India. And that has led to recalculations of growth and inflation. But otherwise, there is everything in this market to break out to a new high. So I would say we may not move sideways. We may actually move upwards, but it depends on this one event to get over.
Hi Nimesh, good morning. Good to see you again. 27,000. Well, the bulls will give anything to get to that mark, sooner rather than later. We've gone through a period of consolidation, a pullback, and a big underperformance as well. What earnings growth are you factoring in to get to that mark?
So for FY27, actually, not much earnings growth has changed. I was just looking at the estimates. The consensus estimates are hardly changed between 1.5–2%. The result season has been very good. Most of the companies have guided that they may see some excess costs on, say, energy-related chain of raw material in the first quarter. But see, if the moment this crisis is over, Nigel, people start focusing on FY28. They will not even look at FY27. This will be all discounted. So we can do our calculations and say, okay, this quarter we will probably see some downgrades coming in, that is Q1. And we will see some downgrade in the 1,230 or 1,240 EPS for the Nifty. We will see some downgrade there. But then the next year you see 15% growth. You are at around 1420 to 1440 range. And then the market looks cheap. And then the growth estimates for some of these high, fast-growing sectors start playing on the valuation. And then you see up move there.
So, when we last spoke to you, you were bullish on, you said 50%, the way you said you'll construct your portfolio is 50% cyclicals, which includes financials, materials, industrials. And then you would also have a balance in defense, healthcare, and consumption very selectively. Has that view changed in the last 2 months, Nimesh? And if yes, why? In what way?
So we have kept actually the portfolios the same. We haven't changed anything. Yes, there are some bruises in the portfolio, but April was generally a kind month for us, and cyclicals have done well, and we've done well on that. But we are not changing anything. We are just waiting. Of course, the longer this persists, this issue, and oil prices remain high, we may have to look at certain sub-segments on some stock-specific calls we have to take. But also, Rima, one of the things I'll highlight here, there are many businesses that thrive on crisis. They can actually shift market share towards them when their competition is struggling. So when costs are going up, sometimes you see unorganized to organized market shift. Sometimes you see market shifting from weak competitors to a stronger player in the market. So those things you will see. Companies that can take price hike, can defend market share, those will do well. So on a bottom-up basis, we may change something, but overall strategy doesn't change.
What's your dark horse sector for the next 6 to 12 months?
So we've been looking at construction, metals, these sectors as deep cyclicals to do well, and we continue to hunt for ideas there.
Tell us a little bit more about that. From the metals pack, what do you like? Non-ferrous did very well. Now ferrous seems to be catching up, and the pieces are coming together. But though we know metals is about momentum, some of these stocks are trading higher than the averages. So give us a little bit of clarity on the metals pack.
Nigel, we are going with two main assumptions that from here on, commodity up move is like a mega trend, because the world will shift from just in time to just in case, where you want to depend on certain countries or certain suppliers for your commodities. Rather than that, now you're shifting to just in case, where you actually want inventory of everything which is critical to you, whether in defense, whether in technology, whether in, say, construction. So this will lead to hoarding of certain commodities. The second trade that we are looking at is all the technology changes that are happening are energy guzzling. They are using a lot of these rare earth metals like copper in their supply chain. So those things will actually create a huge demand. Last few years, there has not been a great supply addition to many of these commodities. So these are the trades we are working with, whether it is ferrous, non-ferrous, even cement to some extent in India. Right now, we are going through probably a slow patch, but we had begun to see double-digit growth. So that's another area. Again, you have to choose your players right, but that's another area that we are bullish on. And anything related to that, whether it is commodity exchanges, whether it is consumables for these metal companies or commodities, even those companies, whether in mid-cap or small cap, have a good trajectory of growth in the next few years, and we are betting on those.
Got that. So when you said construction, that is cement, etc., right, Nimesh?
Even construction companies, Prashant. So
just pure contractors.
Contractors also, yeah. They are trading at very cheap valuation, waiting for a trigger. The order books.
There are in terms of pure contractors, civil contractors, there are not very many, right? I mean, you can.
Very few.
There's Ahluwalia, there is in Delhi, there is one. There is very few in that sense. Is that what you're looking at?
Very few large ones, very few good balance sheets. Some of them are currently stuck because they have either Middle East exposure or the labor has gone to vote in Bengal. So many of them may come back and start showing some good numbers from Q1.
Yeah. No, absolutely. You have a multi-asset fund as well, Nimesh. What is the positioning there?
We are positive on gold and silver both. Silver is definitely high beta compared to gold. In one of our studies, we saw that whenever oil prices go above $100, there is pressure on both, on silver and gold, because there is pressure on overall liquidity in the world. People expect interest rate rises, people expect liquidity tightening. And then it takes a risk off, and that impacts even the gold and silver prices. But if we expect that this Middle Eastern issue will resolve soon, we may see some bounce back in gold and silver also. So we are positive on that. We invested on those.
And what about fixed income there? I mean, are we at the cusp of changing expectation? Global yields are up. Here in India, it may be the last measure, but at some point, if this does not resolve, you'll have to resort to some hike in short-term rates, etc. I hope it doesn't come to it, but what does that mean?
So again, fixed income is a good point. Two issues. One, US yields went up to about 4.63, and generally India and other emerging markets maintain a spread over that. So I think that puts an upward pressure on the yields here. And second, we need to do something about the rupee, the way it is depreciating, and that is actually hurting us on the inflation side. We have a El Nino forecast for August and September, which means there will be higher inflation for the second half also. That means the interest rates may remain at a higher range bound at this range, at this higher range.
Super El Nino, Nimesh, if you were to believe some of the weather guys. I hope it's not. And nowadays on social media, everything is so hyped up that you struggle and you got to read it first, and then you got to go back and check whether it is right or wrong.
You are absolutely right. Absolutely right.
Yeah, but it's an issue, and I think it's been our weather agencies have confirmed it, and some other credible agencies have confirmed it as well. Just one thing on if this is agri and fertilizer and that part of the market. Do you have any exposure there, Nimesh? Just to get back to equities once again.
We are hunting for certain soft commodities which can benefit from this. So companies that are into soft commodity side that benefit from this. Obviously, not really betting much on rural demand side then. If there is a increase in inflation on the rural side, and if there is impact on crop, not betting on areas like tractors or fertilizers or seeds right now, but betting on companies that can say benefit from if the soft commodity prices move up. I'm not right now forecasting a super El Nino or doomsday here. The August and September scenarios are towards still the fag end of the Kharif season. So I'm not expecting a huge impact, but at least providing for those risks currently in the portfolio.
And one final question then on IT. Just for the last 2 days, the rupee level is providing some support to the IT names. So they've been moving up. But, what's the take now on Indian IT stocks? Are they cheap enough to warrant a look in?
So issues remain the same. Valuations remain cheap. This is a bottoming out process, a classic bottoming out process that happens. Again, once the Middle East crisis is done, maybe the sectoral preferences of people will change. But right now, a lot of people may take a defensive position in IT, and some benefit from rupee will definitely come. There are also arguments that if the AI bubble bursts, you see IT companies doing better in terms of stock prices. I think this is a bottoming out process, not expecting a huge run up from here.
Okay, Nimesh, we are waiting. We're approaching the three-month mark. The US, I guess, when they attacked, they thought it would be like Venezuela. They thought it'll be over in 3 days, 4 days. The rest of the world thought it perhaps will last a week. And we are now 2.5 months into this thing with, at least at this point, no resolution, but hope, most definitely. Thank you very much, Nimesh, for joining in. Fingers crossed. Okay. Well, let's talk about the macros for a quick bit, because that's the overhang, right? Sameer Narang is head of economics research group at ICICI Bank, and Upasna Bharadwaj, chief economist at Kotak Mahindra Bank. She's with us as well. Upasna and Sameer, good to have both of you here. Thanks for joining in. Let's just divide this between the short term and the long term. So there is maybe a little bit of firefighting required right now. So let's start with the firefighting and what could the firefighting look like. And then, of course, we can talk about what needs to be done, beyond this firefighting. So we've done 3 or 4 things, right? There is the fuel price increases which are happening. We've done this, the $100 million net open market position for banks. They've tightened rupee derivative rules. We've done dollar facility for oil refiners. We've, of course, moved on import duty on gold and silver, right? And now this market is waiting and watching to see what else, what will be done. And there's a bunch of things. I put out a piece last Friday looking at 5 things which perhaps could be done. Samir, are you expecting anything imminently? And what would the government start with in terms of sequencing?
I think, again, we have seen, Prashant, a small petrol and diesel price hike today, right? So we are seeing these incremental steps. So there are 3 or 4 things that we need to do. One is, of course, raise the price of petrol and diesel at the pump, which should ideally bring down some demand for these products, because keeping the prices at where they are when international prices have moved around 50% may not work out well. So we need to gradually do it. That is one. So some of that will continue. The second is that we have seen some compression or steps towards compression of gold and silver imports. They put together were around $84 billion.
Yeah. Sorry. All this has already happened. I'm asking for what's next.
Next steps will be similar, Prashant. We need to compress it even more.
Okay.
We need to compress it even more. So oil prices need to go up at the pump more. Imports of gold and silver need to get compressed more. So as a percentage of GDP, if they are around, say, 2% of GDP, slightly northwards of that, can they be brought down by, say, 0.5% of GDP? That brings down the CAD materially from, around or northwards of 2% to around 1.5%. And that is a much more sustainable level. The third thing is, whatever requires to be done in terms of incrementally regulatory changes that the government has done. So more steps need to be taken over there. And that's the way forward. I don't think so there is, any knee-jerk reaction required. We have adequate amount of reserves. We need to tackle it gradually. And we don't know how long this, crisis lasts. As you were pointing out, it was supposed to end in a few days. It's lasted very long.
Sorry, that 2% number, this is gold and silver imports as a percentage of GDP from 2%.
Combined.
Yeah, from 2%, how can it bring it down to about 0.5%? So you're saying that perhaps more is required on this?
Yes,
on this
that
front.
would, solve the current account. This is a short-term measure. It will solve the short-term problem. As oil prices come down, then you can, revert back to the normal policy.
Upasana, I just want to draw your attention to the op-ed written by Geeta Gopinath earlier today, where she said that perhaps we should just let the rupee take its course instead of trying to defend it and use our forex reserves. Well, that all sounds good because she said that it works much better than these austerity measures. But the flip side is, as Samir was talking about, the inflationary impact of that. At some point, it gets passed through. All our vegetables are all transported through, using petrol and diesel. And you've got price hikes. And then if the rupee continues to weaken, that's only going to hurt inflation. What's your assessment? Do you agree that we should just let the rupee find its own course?
See, I think fundamentally, of course, normally what happens is the external sector imbalances that are being created at this point in time. It is necessary probably to allow at least some segment to take its course, and that in this case is rupee. Having said that, one needs to be cautious because inflationary pressures is the vicious cycle that one gets into, wherein this could just not necessarily come back to its levels. So there has to be a little cautious approach towards just letting rupee fall free flow. So I would also appreciate, or I would also agree to the extent that rupee should be allowed to weaken. But probably, a little controlled in the sense that RBI should be managing it very closely as well in order to avoid any major shocks coming through a vicious cycle that we're talking about. Having said that, I would just like to say it is better to address this entire issue through an entire holistic balance of payment issue, wherein going back to your previous question, I think Prashant was asking, there are more steps which in the past have been explored, like some curbs. They may sound regressive right now, but I think in the short term, we might be preferring these kind of tools so that current account deficit can be in check through LRS constraints that we can look at. Even on the capital account side, if we can think of certain restrictions to ODI, restrictions to caps on ODI, and parallelly allow rupee to also weaken so that the fundamentals are working in place, and we are also trying to curb the balance of payment deficit, which is widening significantly right now. Thirdly, only when we see some normalization that would come through is when we can expect capital incentive measures to materialize. So I think at this point in time, we should try and take some quantitative restrictions on the current account side to manage it. Just an import duty hike on gold and silver may not be effective. I think a GST hike on gold could also be explored, and alongside further quantitative restrictions to curb current account deficit pressures and allow rupee to depreciate too.
Yeah. Samir, just sorry, on that gold and silver import, you said to bring it down to 0.5% of GDP, or you said 1.5%?
1.5, 0.5% is enough, Prashant. So if you bring it down by even 0.5%,
okay, so from 2 to 1.5. Okay, I just wanted to clarify since we're putting that out. Upasana, the point about ODI, right? Are you talking about LRS, etc.? Is that what you're saying?
Yes, absolutely. So LRS, I mean to say, is remittances. Yeah. There can be a cap to remittances. We've explored this in 2013 as well. And I do agree that these are not the optimal measures to be taken. But I think in the short term, it can be explored.
Yeah. From the current $250,000 to something lower. But is that going to make that big a difference? Or you think, as you said, maybe a bunch of steps altogether?
It has to be a cumulative impact. I don't expect any one measure to have a very fruitful. We won't be seeing fruits by just one or two measures. So I think we will have to do a bunch of measures together.
Yeah. Sure. Are we? You said, I mean, there's no need for crisis-like measures. Samir, I think you said you used a different phrase. So a deposit scheme or a bond issuance, etc., that would qualify as crisis time measures?
Prashant, when global interest rates are so high, I mean, the US 10-year is 4.6% plus. It might as well touch 5% the way things are going right now. Bond yields across Asia, across Europe, UK 30-year is at highest level since 1997, 98. At such higher interest rates, if you do an issuance, you'll have to also pay top interest rate because there will be a spread on top of where the global interest rates are. So that will be expensive, but it can be explored as commercial borrowing issuances by some public sector banks or public sector enterprises. We are seeing record issuances, Prashant, as we speak, by the mega caps in US and Europe to fund their capex. So I think that perhaps would be, in order for funding the BOP deficit this year. But it has to be a mix of measures to curtail the current account as well as, usher in more capital inflows.
Yeah. Just both of you, if you can, talk to us about, there is, of course, other measures on the reducing the withholding tax on foreign bonds. Again, the point is the total holding is about $35 billion. So even if you bring it down, how much of a difference is going to make? The other thing, perhaps, is taxation on the equity front, right? That's also capital outflows. Now, that's a much larger pool of capital. At least it impacts a much larger pool of capital, and the sentiment value of such a move, perhaps, many argue, is also large. Do you think, Samir, we should revisit that?
Well, it's a tough one, I think, Prashant, because the tax policy has evolved over a period of time. You can argue it either ways, that countries like Indonesia, Philippines, where perhaps there is no capital gains on equities, they're also seeing an outflow. And India perhaps is seeing slightly bigger outflow because of the prevalence of IT services. Philippines, that way, would be very similar because they also have a large BPO or, IT services network. So I think irrespective of that, given the way, the macro outlook is, at the margin, it will benefit. But at the end of the day, it is your underlying, macroeconomics, structural drivers, impact of AI, whether you have chip manufacturing or not, or manufacturing exports in general, which can be sent to the US, is some of these markets which are doing well. So perhaps it will help at the margin. Particularly for bonds, I think inclusion in global bond indices is very helpful. We've seen the money that has come in is very sticky. So if we can get that done, it will be very, very helpful indeed.
Sorry. So on equities, you're saying it's kind of it's the bar, you would say the bar is very high that the government goes there.
Because this policy has been made after a lot of back and forth, and we've come around to it. Domestic and foreign investors are charged the same rate. So then you'll have domestic investors being charged a different rate than foreign investors. That's the norm globally. But then it's a change in what we've been doing over the last few years. It's up to the government if they want to do it.
Upasana, just that same question to you.
I would also agree. I think in this environment, what is the cost involved? What are we sacrificing versus what do we expect to gain? I think that is a big question to ask. We may still not really benefit much by even tweaking the taxation front, on the taxation front, given the kind of adverse sentiments that we're seeing globally. So I think at this point in time, we should not really expect the government to tweak the taxation and rather focus on other aspects in how, in the way we can manage this crisis. Because, we might be just about loosening some of the belts, as Samir mentioned, from previously held, beliefs. And then we may still not really necessarily get what we are really expecting. So that will not really be beneficial even from a balance of payment perspective, and that would not benefit rupee. So I think, we have to weigh the pros and the cons while really looking at such measures.
All right. Just one thing, Samir, before we sort of come to here and now, and it's just sort of going on with measures, some firefighting, some long-term firefighting. I think we've done, at least done the whole thing. But anything out of the box, anything, I mean, we keep talking about reforms and, big signaling kind of changes. Samir, anything out there which perhaps change, says, well, here's a change in thinking, a fresh start, something, right? Because the underlying issue is that net FDI, it's a capital account problem, and there the net FDI has been negative for 3 years, right? 3 years or 4 years? So
it's been very low, yes. It's been very low, yes.
So how do you change that sentiment? Is there anything we can do?
No, Prashant, I think the work that we've been doing, we have to continue doing it. And at some point in time, it will get noticed. That's about it. And nothing much can be done. A couple of years back, we never had a semiconductor plant as well. So we've started that semicon fabrication facility. We need to do more of it. And the sentiment will turn eventually. It's a cycle. It's a sentiment issue. It's being plagued across markets. As you've been pointing out, right now, global commodities cycle is on an upswing and oil prices are higher. So importing countries will be at the other end of the cycle.
All right, before we wind down this conversation, Samir, let me get your estimate on growth for the year. It's going to be a challenge. You've got various headwinds up ahead of us. We're hoping for some measures, but growth is going to get impacted. So what are you penciling in terms of growth for this year?
See, we were earlier at 6.9, Nigel. We brought it down to 6.5% because the crisis has continued. So, I would say 6.5% if prices remain here. Otherwise, we were at 6.9.
Okay. All right. What about you, Upasana?
We were already at 6.5, and we are looking at this with a significant downside towards 6 to 6.3% range.
Okay, all right.
Just one more thing, Samir. Yesterday, we had the management of KEC International on the program, right? They said that, and they gave specific numbers on the labor front. They said, again, on the civil front, on the civil side of their business, against a demand requirement of 30,000 workers, right? They're at 15,000. People have just not come back. They promised they'd come back at a certain date, but there's a shock. I mean, the numbers have fallen to about 10, 12,000. They're up to about 15,000, but that's so half of what is required. Across, I mean, you have a bird's eye view at the bank in terms of, you lend across sectors, etc. Is this a big issue, Samir?
It's in bits and parts, Prashant, you're right. Some of the people have gone back. They typically do go back, during this period of time, and then they do come back. Could be a little bit of delay because of the overwhelming heat conditions, or they've stayed there for slightly longer. I don't think so. Structurally, it will change. People will come back. It's a matter of time. In bits and parts, probably it is true anecdotally that some people have not come back.
Yeah, it is anecdotal, absolutely. But I mean, I just mentioned that since we got absolute exact numbers from a company. But you're right. I mean, this is when, and I did mention this point that maybe there's a heat, maybe people do go back. We've heard it from other companies as well. We'll see. Thank you very much, Sameer and Upasana, for joining us here on the program. Really appreciate your time. We'll see what, measures, if so, the government chooses to, decides to bring forward. But we've had a bevy of suggestions, if you want to call it, or thoughts from both Upasana and Sameer right now. We'll take a quick commercial break here. We have the management of Genius Power. Jitendra Kumar Agarwal joins in. We'll talk about the fourth quarter performance, and that's the conversation coming up next.
Welcome back. Nifty is holding above 23,700. The mid-cap index is now up 1% and the advanced decline ratio 3:1, a complete reversal of what we had yesterday. But let's invite Genius Power Infra on our show. Mixed set of numbers. Top line growth strong, 62%. But margins have missed the guidance. Jitendra Kumar Agarwal, joint MD of the company, is now joining in. Mr. Kumar, morning. Rima here. Let me start with your margins. Your standalone and consolidated margins have come in below your FY26 guidance of 20%. So can you explain what impacted the margins, what led to the compression, and what is the outlook for FY27 on margins? And can you hold on to that earlier guidance on revenues of 5,500 to 6,000 crore that you had shared with us earlier?
Hi, good morning, everyone, and thank you for calling me again. It's always a pleasure to be part of this conversation. So on the margin side, there have been some pressure because of the raw material prices and the dollar fluctuation. That is the reason you see the EBITDA margin has gone down in the fourth quarter. That is the prime reason. And on the guidance, I'm more than confident that 6,000 crores is minimum what we will do in the next financial year, and we can go up to 6,500 crores. That over the period of time we'll get to know even better, but I'm pretty confident of 6,000 to 6,500 crores. And on the margin for the next financial year, I'll give a guidance of around 18% because yes, there will be pressure on the raw material because of the ongoing situation.
Mr. Agarwal, good morning. There is a more structural issue which we've been made aware of by companies we've spoken to. I mean, we spoke with Sirma recently. We've had the management of Keynes. They all do a lot of things, but also manufacture smart meters. And there, they've both companies and more. I'm just citing two. Have told us that the business is not what it used to be even 2 years ago because of at the ground level there have been some protests, governments perhaps changing their mind about how fast rollouts should happen. So working capital cycle, etc., in terms of receivables from the government has stretched out. Could you give us a sense of what is happening, sir? An overall perspective, because you're one of the largest players in that space.
So just to give you the heads up on this, last year we installed around 87 lakh meters. And this year we'll definitely install more than 1 crore meters. I see no doubt in that. And from last financial year, there's almost an average of 35 to 40 lakh meters are being installed every month across the country, which reached up to 50 lakh meters. I see the same run rate going this financial year. And regarding this protest on the ground, this has been going on in small nook and corners in the past also. There were some issues in Gujarat, there were some issues in Rajasthan, there were some. So I have seen this problem from electromechanical. The whole country went to electronic meter in 2001 to, even at that time there was some resistance. Almost 7 crore smart meters are installed in the country. That the consumer is getting benefited, and there's a clear-cut indication of that if there is a political will against smart meters. Assam is the classic case study. So more than 65% consumers in Assam are smart metered, and the same government is repeated with a thumping majority. So there is a will everywhere. There's absolutely no question of it.
So you're saying from a government side, there is no change in thinking, nothing at all. So it's a rolling cycle of maybe, it gets highlighted around the time when a particular state, there is elections or something, and then kind of sort of it settles down and you move on. That's what you're saying.
Absolutely. And you can see that in last 2 years, and you can see that from the historically in last 2 decades. So I'm more than confident on that.
Okay. All right. Hi, Mr. Agarwal. Good to see you. And as always, you're sounding very upbeat. That'll be good to see from your shareholders' perspective. But let's get a couple of crucial details out of the way. One is your cash flows. The last time you chatted with us, you say that in FY27, your cash flows will turn positive. Is that on course? And also your working capital days, I'm noticing, has come down from the peaks that we saw earlier. Where does that number stabilize at?
So cash flows are improving by the day. There is no doubt about it. The number, as you rightly said, this working capital days has also come down. But as I guided earlier, that we will be positive by 2027. That is not, that will be a little unlikely. We will be definitely positive by 2028. I have no doubts in that. 2027, the further the cash flow will improve, there will be a lot of reduction in the working capital days, but we will be positive. I have no doubts.
Okay, so now you're saying that you turn operating cash flow positive in FY28, not in FY27. Is that correct?
Looks very unlikely in 27.
Okay, got it. And working capital days, you're saying it comes down a little bit. Where does it stabilize at?
So it will come down significantly. It has already come down from almost, I would say 343 days. It has come down to 275 days. I see it going down below 200 days and even more by the end of this financial year.
Okay, all right. So sub 200 days by the end of this financial year. The chart that should come up for our viewers on the screen is the other worry. You have a very good order book, but the street wants to see a lot of order inflows. And since we spoke about state elections, Tamil Nadu is out of the way in terms of the election results. So is there a tender likely to open up in Tamil Nadu or in Delhi? Because you've spoken about that in the past. Where does the new tender open up at, and what is the opportunity size?
Well, the opportunity is fairly large. It is not only Tamil Nadu. The few states which will come with a smart meter tendering, which has already come out with the tenders. Almost 18 lakh meter tender is going on currently in Madhya Pradesh. More than 3 crore meters in Tamil Nadu. And Punjab is already out with the tenders. Haryana has come out with a 40 lakh tender. In total, in this financial year, more than 8.5 crore smart meter tenders will be decided.
Okay.
Now it comes as a very positive outlook now. So earlier they were thinking of a tender of around 50 lakh meters. Now already I'm pretty confident that they will come out with a tender of more than 1.5 crore meters. So
1.5 crore meters from where, sir?
From West Bengal.
From West Bengal. So cumulative, what will be the new tenders that will come out in this year? If you could give us that number.
Cumulative, currently ongoing tenders and the new tenders put together will be around 9 crore meters.
9 crore. And your market share is what? Approximately what?
Currently, we are maintaining the market share of 22-23% meters as a AMISP and more than 35% meters. If you put AMISP and meter manufacturing together, we are confident that we should be able to maintain our market share.
You will be hoping for 1.5 to 2 crore meters in this year? Out of that, all that comes out?
As a AMISP, yes, we are very confident that we should be in a position to maintain our market share.
And there's no risk to the Tamil Nadu tender because of the change in the government? Because that's sizable 3 crore tender.
I don't think so.
You don't think so. What's the reason, sir, for the sharp decline in your order book? There you have it, 30,000 down to 25,000?
Because one thing everybody has to understand, all this order book, once they start executing, you have to understand that we have installed 87 lakh meters. All the projects have gone operation go live. The 20% revenue from this order book moves to the platform. So as on that, out of 25,000 meters, 25,000 crore order book, 23,000 crore comes from the AMISP business. Out of this 23,000 crore business, 22,000 comes from the platform. So once the order starts executing, 80% revenue of this 22,000 crores will come to GS. So that is, people have to understand it more correctly.
And what is your debt, sir, as of now? And what is the target for peak debt and the timeline to bring it down?
So we were always a net debt positive company in the past. But of lately, because of so many projects and the revenue going up significantly, we have taken the working capital loans. But maximum it will go up to 2,000 to 2,500. That is the maximum level we see. Currently, we are in the range of around 1,500 crores. And we see it going up to 2,200, not more than that.
Okay, in the near term, so which is the next tender should we look forward to that will come out first from which state government? Sorry, I interrupted you earlier. You mentioned Tamil Nadu, West Bengal and various other states, Madhya Pradesh as well. So near term, next 3 to 6 months, what are the states that open up for tenders?
So 3 tenders which I feel are going to get most fast will be Madhya Pradesh, which is already an ongoing tender of around 18 lakh meters. Haryana, they have 40 lakh meters is already tendered, and further 40 lakhs will come. So almost 80 lakh meters in Haryana and around 3 crore meters, this 3 crore meters of Tamil Nadu. I see these 3 tenders to be finalized fastest in next 3 to 6 months.
Okay, all right. And does it boil down all then to, besides operating cash flows, what about net profit? The last time I pushed you, I said, is 900 crores of net profit possible in the coming year? For this year, should we be looking at that number, around 900 crores of net profit?
This financial year looks difficult now because of the lot of pressure on the margins, as I'm giving the guidance of 18% EBITDA, so looks difficult. But next financial year, 900 crores is definitely on the card. And I'm pretty confident that we will achieve it. If not this year, we
All right, we'll leave it there. Thank you very much for joining us, Mr. Agarwal. And you know, we'll touch base as we go through the year, that is financial year 27. Well, let's just move on, right, and take a look at what the index is doing, and let's take a look at the rupee and what that is doing as well before we move any further. So it's still 40 flattish kind of day so far. Rupee is also I think come up a little bit. 96.32 is where the dollar rupee is right now. Well, there's more view coming in from BSE's MD and CEO, Mr. Sundaraman Ramamurthy, sharing how BSE is navigating these challenging times. I mean, the stock's closed down phenomenally well. It's a record high. Mr. Ramamurthy highlighted the sharp rise in market participation over the last year or so, saying, well, there's a lot more distance to cover. Listen in.
Somewhere it's due to hover around 2 digits. 10 to 12% used to be the domestic one, and 15% used to be the FPI holding, 15 to 20. Today it is reversed. If you look at last year, given the global situation, there has been an outflow, net outflow of around 36 billion US dollars by FPIs. But to compensate it, the net investment by the domestic institutions has been 91 billion. This has not only taken care of the outflow, but also strengthened the sensex to a great extent and has prevented it from a free fall, notwithstanding the severe geopolitical tensions. So it's a very healthy mix at this point of time. Of course, there is a flight to safety by FPIs, and I'm sure once things normalize, the attraction of India as a growing destination will bring them back in big numbers as it was always before. When there is a turmoil like this, not necessarily the volumes go down. The economies get into difficulties, but volumes do not go down. For example, if you look at my cash market, last 1 year it saw around an increase of 30% and derivatives market around 40%. That is one point which we need to reckon. The second is, India is growing and a significant amount of population is yet to come into the capital markets, and slowly they are starting to come in. Last year alone, I have seen 35 million Indians coming and joining the BSE bandwagon by registering with their unique client codes. That's the second point which we need to reckon. The third is, more and more improvements need to be done and innovations need to be done in terms of products, considering which are all the sectors which could be seeing great volatility and where there is a need for product to hedge the positions of the individuals who are investing the money. We have introduced an index called Focused IT in the derivatives market, considering the turmoil in the IT industry because of supply chain issues and also because of AI, the demand for memory, and therefore the increase in prices. So IT stocks in India have become very volatile, and to take care of the hedging need, we brought this index. It is 5 days of trading we have seen till now, and it is really showing a lot of green shoots of growth. To keep up the momentum, I'm sure at some point of time when things settle down, the credit growth will increase, and therefore the corporates will be able to show better earnings with a better credit growth and better demand and supply and eased out supply chain situations. And that should fuel back the enthusiasm. And of course, Japan, Korea and all are economies which need to be looked into, and they can be growing faster once things become clearer. And a collaborative approach which India today is having towards multiple nations, and the principles and policies of ease of doing business which Indian government is pursuing should help in keeping up the enthusiasm and bringing it forward.
Okay, all right. Well, that's a stock that's been on steroids, up 4% even in today's trading session. BSE currently at the high point of the day. Let's hop across to Chandan Taparia, Head Derivatives and Technicals, Wealth Management at Motilal Oswal Financial Services. Hi Chandan, good morning. Good to see you in. The markets are showing some sign of life. From the lows, we've seen a good bounce yesterday. In fact, we're up, I think, close to around 250 or 300 points. Your view on the index, what are the levels we should track? And then fill us in with your trading calls.
Good morning, Nigel. Thanks for having me. So yes, Nifty took support near 23,333 marks on the last trading session. It formed a bullish price pattern similar to hammer, and at the same time, put-call ratio witnessed recovery. And the good part is that FIs are buying from last two trading sessions. That is also supporting some sentiment for recovery mode. So as of now, I believe that the momentum or bounce could extend. As of now, on immediate support of 23,500, one can buy for an upside move towards 23,850 to 24,000 in Nifty. And if I look at the Bank Nifty index, that is slightly underperforming, but it also bottomed out. Momentum is missing, but as of now, if it manages to hold above 53,500, one can buy with support of 53,200 for a recovery towards 54,000 to 54,250 level. Looking at the stock wise, first is buy on policy Bazaar. It has seen a strong momentum. In fact, the longs are being built. Recently, it has taken support at 50-day exponential moving average. It has been making a high top, high bottom on the daily chart. Just 2 days back, it gave a major breakout above 1,750. So momentum could continue. One can buy with support of 1,755 for an upside target towards 1,880. Second trading idea, that is buy on Oracle Finance. One of the strongest counter when entire IT was falling down. This was comparative resilience. And when the IT sector is recovering, it is all set to give a fresh breakout. In fact, we are observing an early sign of fall and flag breakout on the weekly chart. So one can buy with support of 95.20 for an upside target towards 10,100 level. And positive view on the capital market theme, whether we talk about the BSE or exchange infra theme, MCX, we are positive. Our stock rallied well, but still trend is positive. And we would suggest to chase the trend as of now. Use any small dip with support of 4,120 for an upside target towards 43.50 to 4,400 level.
All right. Thanks very much, Chandan, for that. We will take a break. We will come back with Manisha with a focus on commodities. Stay tuned. Coming up.
Welcome back. Let's turn our attention now to commodities. Manisha is now joining in. Manisha.
Thank you so much for that. Well, I'm looking at the agriculture commodity prices today because we've seen a constant rise into this one as well. The FAO data that came out in the month of April suggested that agriculture commodity prices are now trading at a 3-year highs. This comes in on the back of elevated crude oil prices. You have higher shipping, higher insurance costs, logistic costs. There is also, availability of tankers an issue, and all of that seems to be building its way in case of agriculture commodity prices there. The other thing really is about the press note that we saw from White House suggesting that China is now committed to buy U.S. agri products worth $17 billion annually over 2026 to 2028, absolutely supporting many of those commodity prices, which China is now going to buy from US, which is basically soybean, wheat, corn, etc. And all of these commodity prices have seen a surge in the overnight markets there. So when you look at palm oil prices, we are trading at around 4,500 Malaysian ringgit above those kind of levels. This also comes in because of 5th month of gains in prices, and there are supply concerns coming in from Southeast Asia supporting those prices. Soy, sunflower have been elevated due to biofuel demand and supply tightness in the major producing countries therein. therein. You have wheat prices, which gained 4.5% in the overnight markets. There is high input cost and also the Black Sea tightness continuing to support the wheat prices in the global markets for the last 1 year or so. And then you have cotton. Prices here as well gained up by 4% in the overnight markets. The U.S. production is projected lower by 600,000 bales in this year as compared to last year, keeping those prices on the higher side therein. It is also about the fertilizer shortage that the markets are looking at. For India, there is fertilizer coming in, but that is heavily subsidized. Government seems to be paying a big chunk of that. In the international markets, well, 39% of the world's fertilizer transits via the strait. And when you look at the Middle East as countries, nearly 50% of world's urea export comes in from that area as well. And that's exactly the kind of shortage that the markets are looking at. If you look at biofuel mandates, that food versus fuel of a debate just about continues. So what we do understand is that the 65 countries as of now either have implemented or announced already in sense of biofuel mandates. Now, this also is about biofuels and ethanol in some sense. So if I take the top 5 countries herein, and the most relevant one, of course, is India, where we already are looking at E20 in focus right now. And it's not just about sugar, ethanol, it also is about rice and corn, all of those commodities in use there. Indonesia is really leading with nearly B40 right now. They already have announced B50, which is blending of 50% in sense of biofuels from August 2026. Malaysia stands at B15 as well. You have countries like Brazil, which are looking at E32 and B15. Argentina, B12 to B7.5% is what these countries already are putting in. Australia, just about newer country when it comes to blending, have started with E2 and B2 as well. So as I said, 65 countries already announced and implemented. 85 also are looking at various policies when it comes to biofuels there. And most important factor when you call about agriculture is going to be about the Indian monsoons. Now, we do understand that there is early progress, and in Bay of Bengal, Kerala onset is projected on 26th of May. Bombay could be looking at rains starting by the 5th or 6th of June as well. But what we do also know is that whether it is about IMD or SkyMet, both of these agencies have suggested that it's going to be a below normal monsoon at 92 to 94% of a probability, and much of El Nino impact would start coming in for the second set or the second half of the monsoon season, and that is where the concerns really seem to be arising from. Even as for 54 to 56% of India's irrigable land is irrigated, but it is 45% which is completely rain-fed, and that is where the major concerns come in from, suggesting that many of these agriculture commodity prices perhaps would continue to surge higher.
All right, Manisha, thank you very much for that. The markets are looking better. I think we're up 114, 115 points. 756 at this point in time. Market breadth, I think, is also pretty positive. 2,200 stocks are up and about 700 stocks are lower at this stage. And look at what BSE is doing. We had the BSE management with us. It's up another, 3.5 odd percent right now. And if you can pull up the Nifty IT index. So Nifty IT last Friday, the Friday before basically last week was down 6%. Yesterday, the Nifty IT index was up 2%. It's up another 3.75%. So, this is not small up. This is large. TCS, Infosys, and a bunch of others, Tech Mahindra. Some of the moves, if you can at least pull up the 4 large IT stocks. 3, Infi, I think, was up 4, TCS and HCL Tech also, maybe a Tech Mahindra. So across the board, there is buying, which seems to have come in, maybe short covering buying, but most certainly that is appearing.
The INR is quite a tailwind, right? The average in the Jan to March quarter, rupee dollar average was about 91.5. And since then, we're now talking about 96. So straight away, that's a 5% rupee depreciation. So that's going to help, right? At least absorb some of the costs.
91 in Q4.
91.5 on an average, not end to end. On an average was about 91.5. Now we're looking at straight away a 5% depreciation. So at least that gives the companies some buffer to absorb the incremental costs that they are making, or at least show up partly in the P&L. So not everything, as we saw in the Q4 numbers, that not all the rupee benefit shows up in the P&L at the bottom line, but the companies are using it as a buffer.
I think nobody's buying IT because rupee is down. I think it is just some, because it just falls a lot, and then, there is some buying at the margin which starts to come up. Just some short covering that kind. We've seen this. I mean, just go back last 2 years and track the IT index. Falls very sharply, especially in the last 3-4 months or so. Falls very sharply, and then it's got weeks when it starts to come up, and then it sort of falls again. But at some point, enough will be enough, and that no one knows, right? We'll be wiser in hindsight, and then we'll point and say, well, that was the low. But I don't think it's the currency which will be the reason for it. We'll take a quick commercial break here. We'll have the group CIO at Bank, Julius Baer, to talk to us about the impact of the ongoing geopolitical tensions in markets and more. Stay tuned, coming up.